Welcome back to Alpha Recap, your quick, smart rundown of the market action. Markets closed the week on a risk-off note, and we've got a lot to unpack. As always, if you have questions, you can reach us at stockalpha.ai.
Love it. Big week, big swings. So, what really stands out here is the spike in treasury yields driving a lot of the action. That set off rotation across sectors and some heavy profit-taking in big names.
Right. The headline was that rate sensitivity ripped through certain models. You saw Opendoor get hit hard. It plunged in the session down about 6%, because higher yields make that financing-heavy model much tougher to pencil out.
Yeah, that tracks. And on top of that, the big semiconductor names pulled back. NVDA finished the day down just over 3% to about $172.93 on roughly 230 million shares. And Intel was down about 5% to around $43.87 on about 157 million shares.
Heavy volume on those down days, not a quiet dip.
Exactly. Heavy volumes suggests institutional repositioning, not just a thin market wobble. Active managers were trimming AI exposure, even as pockets of AI optimism kept bubbling up elsewhere.
Before we go further, UBS put out a striking long-term call, a 7,700 S&P 500 target by year-end. That implies roughly a 17% upside from current levels, which is pretty bold given the near-term noise.
Bold is one way to put it. I mean, when you step back and look at this, UBS is clearly looking through the short-term jitter from yields, oil, and geopolitics toward a full-year recovery. But markets were trading on the nearer-term signal yesterday.
Right, and that sets up the central tension. Bullish medium-term conviction versus immediate rate-driven volatility. Okay, let's break this down into the four themes dominating the tape.
Theme 1. Rate sensitivity and short-term volatility. Opendoor was a poster child. Financing costs rose, margins compressed, traders de-risked fast.
And UBS's view highlights the time horizon split. Their 7,700 target assumes investors will stomach bumps in the road, including about a 50% market pricing of a Fed hike by October. So you can have a bullish destination and a rocky path.
Theme 2. AI optimism versus profit-taking. Planet Labs reported record revenue and an expanding backlog tied to AI initiatives and rallied into the close. A nice contrast to the mega-cap profit-taking.
Planet Labs is interesting because their backlog, effectively contracted or forecasted revenue yet to be recognized, gives revenue visibility. That translated into a strong market response, whereas some of the big AI names had investors booking gains.
Theme 3. Idiosyncratic small cap and minor moves. We saw huge percentage moves in microcaps. For example, one name jumped about 23% to around 9 cents, and another spiked about 140% to roughly 1 cent on very low volume, which reminds you how wild liquidity can be in those stocks.
Big swings, tiny volumes. Gambling, basically. Fun to watch, dangerous to hold.
And in mining, Liberty Star expanded its Hay Mountain footprint to over 31 square miles and reported a 107 grams per ton assay, roughly 3.4 ounces per ton at Red Rock Canyon. Geological promise, but the market barely budged.
Exactly. Exploration wins are big on paper, but they don't automatically translate into short-term re-ratings. That's a long runway story with lots of execution risk.
Theme 4. Biotech's broader narrative. Apabetalone keeps showing up in translational studies across oncology, heart failure with preserved ejection fraction, chronic kidney disease, and muscular dystrophy. Remember, the bet-on-MACE signal showed about a 41% reduction in heart failure hospitalizations. That's why this keeps catching partner interest.
Important caveat, though. These newest papers are mechanistic and translational, not registration-quality clinical readouts. They expand the optionality and the story, but they don't remove the binary clinical risk.
Right. Analysts are saying optionality versus binary outcomes. Translate that into plain English. It's promising science that can lure partners, but it's not the same as saying it will win regulatory approval.
Let's pull apart the big moves a bit more. Why do yields hurt Opendoor type models? Short version, those businesses depend on cheap financing and tight spreads. When rates go up, discounted cash flows get smaller and financing spreads widen. Margins evaporate fast for leveraged inventory models.
For semiconductors, the heavy volume declines in NVDA and Intel matter because they signal institutional rebalancing. For NVIDIA, large volume pullbacks can reset momentum and create a window for managers to rebalance AI exposure. For Intel, the move reinforced longer-running worries about competitiveness and the capital-heavy nature of semiconductor manufacturing.
Planet Labs' backlog point is worth repeating. Backlog equals revenue visibility. When it grows alongside record top-line results, it gives investors a clearer line of sight into future bookings, which can support multiple expansion if execution stays solid.
And on Liberty Star, a 107 grams per ton assay is eyebrow-raising from a geological lens. But the path from a headline assay to a mine is long and expensive. Investors are understandably cautious until permitting, metallurgy, and scale are de-risked.
Quick reaction segment. Microcap fireworks? Wild. Heavy volume in megacaps? Significant. Biotech translational papers? Intriguing.
Short and sweet.
So who should care and what should they watch? Short-term traders should expect elevated intra-week volatility. Position sizing and liquidity management were critical after these moves.
Growth investors focused on AI should note the differentiation. Companies monetizing AI now, like Planet Labs, got rewarded, while some long-duration AI leaders saw profit-taking. Selectivity mattered.
Income and value portfolios felt the effect too. Rising yields increased the opportunity cost of holding richly valued growth names and pressure interest rate-sensitive business models. UBS's optimism is medium-term. Near-term repricing risk remained real.
Biotech watchers should track partner chatter and translational trial starts for apabetalone. The science is expanding the candidate's addressable indications, but the difference between translational data and regulatory proof remains huge.
Commodity and exploration investors. Those bonanza assays are exciting, but expect a multi-year timeline from discovery to production. Execution risk is front and center.
So, strategic items to monitor next week. Rate dynamics, especially intraday Treasury yield swings and any Fed commentary. Earnings and guidance from niche AI and data players to see if backlogs are a common theme, and continued volume patterns in the megacaps to gauge whether de-risking is broadening or settling.
Also watch biotech conference presentations and partner announcements for apabetalone, and keep an eye on microcap liquidity. Sharp percentage moves in low-price names often reverse.
Final takeaways. 1. Markets closed the week lower as rates spiked and geopolitics rattled risk appetite. 2. UBS is bullish on the year-end picture but expects a bumpy road. 3. AI narratives are alive and well, but getting more nuanced. Winners at the small cap and niche data level performed, while some mega-cap leaders experienced profit-taking. 4. Biotech translational work like apabetalone studies creates strategic optionality, but not immediate regulatory clarity.
And 5. Classic portfolio hygiene mattered. Differentiate macro drivers from idiosyncratic news. Size positions for liquidity, and watch yield moves closely.
Honestly, I was a bit surprised by how much volume accompanied those semiconductor declines. That felt like the clearest signal of institutional rebalancing this week.
Yeah, absolutely. All right, that wraps our recap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. See you next time on Alpha Recap.